A look at the stock markets for the week starting 6th of October. E-mini S&P was nice last week. We dumped as far as this big 1918 level. You can see it's the trendline support, 4.5 year trendline support, as I talked about in the reports. And we bounced perfectly off there. It was to the tick. So that was nice. We advised to jump into longs there, and it worked nicely. Friday we looked for a continued rally, and we did get that. So all pretty textbook, really. We've closed above the 100-day moving average at 1955, so it looks good. I quite like this little 3-day formation here. I think it looks positive. I don't know whether we're going to steam into another leg higher. Particularly, I'm slightly concerned that we're going to build the right shoulder of a head and shoulders pattern here. Something's telling me that we're not going to break to new highs. I could be wrong, but this is just my theory. This right shoulder here really took 2 months to build. I've got this feeling that we're going to spend the next month building a right shoulder and then we're going to collapse. Anyway, it's just a theory. It's pure guesswork, to be quite honest with you. There's nothing. It's a gut feeling. That's all I can say. If we break above this shoulder high here of 1985, 1986, then there's a real good chance we'll test the previous highs up here at 2022. Then I'd probably be looking for a double top as well. I just don't think we're going to see another new all-time high this year, but anyway, we'll have to see. We've started covering the Russell 2000, the mini Russell 2000, so this is a daily chart, shows the price action for the whole of this year so far. We bounced off this trend line, which was matching the previous two lows for the year around that 1078, 1077 level. That worked nicely. We'd hoped that would hold. We've got a good bounce back. That was quite a positive candle again on Thursday for this market, as was the candle for the S&P on Thursday. So we got the bounce that we'd expected. I don't think again that this is going to last too long. I'm worried about this whole pattern this year. We've got this double top, which I really don't like, and it's almost a double top with a head and shoulders pattern built in. I don't know whether that's actually a recognized pattern, but to me I just don't like it. I think we could bounce back. I don't know how far. Maybe we could get to these 100 and 200-day moving averages. I wouldn't rule that out. I do think we're going to get a decent bounce. We'll have to monitor it day by day, of course, but I do think that this is possibly even the last chance to get out of these US stock markets before a potentially serious dump into the end of the year or maybe next year. The Nasdaq picture, again, Nasdaq's a new market we're covering, is not quite so negative. We did get a bounce off some good support here, some Fibonacci support at least. We spiked through it, but we managed to hold above the 100-day moving average, so that was good. The question now this week is, we've got this trend line going back to April, as you can see. The question is, it's held quite nicely there. Will that hold? And will we then turn lower, or will we make a break above here and then potentially even retest these recent highs, or the year's highs anyway, up here at 41.27? That we'll have to have a look. Not such a negative pattern, potentially negative pattern here, I have to say. So if we do get above this trend line, it will be much more positive for the Nasdaq, but I would be concerned about a double top. That's for sure. Dow Jones picture, E-mini Dow Jones is also quite positive actually. We managed to bounce above the 200-day moving average here. We just held on to this important fib support around the 650 area. So Friday, nice positive candle back above the 100-day moving average. Yeah, we bounced off the 200-day moving average. We're back above the 100-day moving average. So it looks quite positive, at least for this week. We'll have to see if we can test these early September highs up here and see what pattern develops. It's possible we could get a head and shoulders pattern. You can see potential left shoulder here, head, and this could build into a right shoulder, but it's early days yet, so that's pure speculation on my. I had it in big capital letters how the DAX looks frighteningly negative in the longer term, and I had that in big capital letters all the way through the week on my reports, just to emphasize how concerned I am. I just don't like this. This could be one big left shoulder, this could be one big head, and we could now build a similar right shoulder. It took 4 months. If you want to take this whole pattern as a left shoulder, you could argue that it's just this area here. It's a bit vague, but it took, let's say, 4 months to build what could be a left shoulder. It might only take 2 months to build what could be a right shoulder. We'll have to see what happens through October. It's not the clearest pattern of all. There's just something I don't like about it, and I really do think that we could head lower into the end of the year or next year. anyway, it's early days. We're now oversold, but look at these big spikes in volumes on these down days. I think we're going to recover anyway. I think we could get a decent recovery this week and possibly into the end of October. And after that, I'd be more concerned. Something's troubling me with these stock markets, and I think we're building some topping patterns. But as I say, it's very early days. The FTSE's been absolutely battered. We've broken back below this trend line, which goes back to last year. In fact, let me see now, June of last year. So that's been quite important. We've managed to hold on. I'm showing you the weekly chart here because we really need a longer term perspective when we look at the FTSE. We cut through the weekly 100 week moving average there at around 6,500, but we rallied nicely off the 6,400, 63.90 area. That was really important. That's a longer term fib support, and we did expect that to be the low for the week, and in the end it was. So that's quite good. Short term, that's quite good, and we could again also see a rally. As just to repeat, I do think the stock markets are okay for this week and they can recover. It's the longer term that I'm worried about. Again, very early days, but there's just a potential negative situation developing with the moving averages. 100-day moving average there in the red, 200-day moving average there in the blue, just starting to turn lower. It won't take an awfully long time before this 100-day moving average starts to cut below the 200-day moving average, and that will be an added negative signal. So I think that any recoveries in stock markets are going to offer selling opportunities, maybe even later this week or certainly later on in the month.